Looking for income, value, and stability in one overlooked stock? At Insightful Value, we hunt for exactly that. And J-Power just might check all the boxes. Its stock price has drifted lower, but behind that dip lies a utility with strong cash flow, solid dividends, and a strategic role in Japan's energy future. This breakdown is for informational and educational purposes only, not financial advice. J-Power, officially known as Electric Power Development Co., is one of Japan's largest electric utilities. It operates thermal and hydroelectric power stations, along with wind and biomass facilities. Unlike some domestic peers, J-Power also has a global footprint, with projects in Southeast Asia and the U.S. The company is a key part of Japan's energy infrastructure, supplying electricity primarily through wholesale markets to other utilities. It's an essential player, but the market seems to be sleeping on it. Let's get into the fundamentals. J-Power's recent share price weakness is largely due to concerns about rising fuel costs, regulatory uncertainty, and the long-term energy transition in Japan. However, the company continues to generate strong operating income and has a healthy dividend yield of over 4%, backed by stable cash flow. Its payout ratio remains conservative, and free cash flow covers the dividend even during periods of economic stress. From a value investor's lens, J-Power trades at a low earnings multiple compared to both global and domestic peers. Price to book is below 1, and EV/EBITDA is also attractive. The company's debt is manageable, and its interest coverage ratio is healthy, showing that this isn't a distressed asset, just an undervalued one. Now, there are risks. J-Power still relies heavily on coal-fired generation, which puts it under pressure in a world moving toward decarbonization. While they've committed to carbon neutrality by 2050 and are investing in renewable energy, that transition won't happen overnight. There's also the issue of Japan's slowly declining population, which affects domestic electricity demand in the long run. And like all utilities, J-Power's margins are exposed to fuel cost volatility and regulatory decisions. But there's upside too. J-Power is investing in offshore wind, battery storage, and hydrogen-related technology. Its expertise in grid management and large-scale energy infrastructure gives it a solid base to pivot into cleaner energy sources without sacrificing financial stability. International projects add another layer of diversification, and as global demand for stable, baseload power increases, J-Power's capabilities could be in high demand. At Insightful Value, we specialize in identifying companies like J-Power, overlooked, undervalued, yet fundamentally sound. We go deep into the numbers and the strategy, stripping away the noise so you can understand what really matters. Whether you're a long-term income investor or someone looking for a contrarian value play, J-Power is worth a closer look. You can find more in-depth analysis of J-Power and other undervalued stocks on our website at insightfulvalue.com. And don't forget to subscribe to this channel so you never miss a potentially smart opportunity.